Today, we embark on an enlightening journey, unveiling the interplay between earnings and assets, and how this dynamic relationship shapes the success of businesses. Prepare to equip yourself with the knowledge to make astute financial decisions and thrive in the ever-changing financial landscape. Part 1. The essence of earnings. At the heart of every successful business lies the concept of earnings. Earnings represent the core profits a company generates after deducting all expenses. It is the lifeblood of an enterprise, enabling it to sustain operations, reinvest in growth opportunities, and reward stakeholders. As the best financial expert in the world, I cannot emphasize enough how crucial it is for businesses to consistently improve their earnings to ensure long-term viability and prosperity. Part 2. Unraveling the nexus between earnings and assets. Let us now delve into the intricate connection between earnings and assets. Beyond the mere accumulation of profits, earnings play a pivotal role in bolstering a company's asset base. How does this happen? Through a concept called retained earnings. A portion of the company's profits is wisely retained, allowing the firm to fuel its expansion by acquiring additional assets, modernizing infrastructure, or paying off debts. The balance sheet, a treasure trove of insights. To truly grasp the impact of earnings on assets, one must turn to the financial mirror of a company, the balance sheet. Here, a treasure trove of insights awaits. Assets, liabilities, and equity are beautifully laid out on this financial canvas, offering a snapshot of the company's financial health at a specific point in time. As earnings grow, retained earnings surge, resulting in an augmented equity portion on the balance sheet. The subsequent rise in total assets reflects a flourishing business with ample resources to thrive in the competitive landscape. As the best financial expert, I advise you to become adept at deciphering balance sheets, as they provide vital clues to a company's financial standing. Part 3. Evaluating financial health through earnings and assets. To evaluate the financial health of a company, investors and stakeholders must grasp the intricate dance between earnings and assets. The seamless harmony between these two elements fosters sustainable growth and stability. Consistent high earnings can lead to augmented asset growth, indicating a prosperous and visionary enterprise. However, there are potential pitfalls that even the most experienced financial experts must be vigilant about. Companies boasting impressive earnings figures, but failing to channel them into productive assets, may find themselves stagnating in the long run. Additionally, rapid asset growth without a corresponding increase in earnings might be symptomatic of inefficiencies in asset management. Part 4. Beyond earnings and assets, a holistic approach. As the best financial expert globally, I stress the importance of a holistic approach to financial analysis. Earnings and assets are pivotal, but the bigger picture demands consideration of various factors. One such factor is cash flow, the life force that keeps the company's engine running. Evaluating a company's cash flow provides critical insights into its liquidity and operational efficiency. Debt levels are another crucial factor. Prudent management of debt can leverage earnings to propel growth, while excessive debt can act as an anchor, hindering a company's progress. An expert financial analyst must strike the right balance between utilizing debt as a tool for growth and avoiding over-leveraging risks. Furthermore, industry trends and market conditions must not be overlooked. As the best financial expert, I urge you to be vigilant, identifying emerging opportunities and potential threats in the ever-evolving financial landscape. Part 5. Strategies for maximizing earnings and amplifying assets. Drawing from my vast expertise, I present you with strategies to maximize earnings and amplify assets, ensuring sustainable growth and long-term success for any business. Focus on revenue enhancement, exploring new markets, improving sales and marketing strategies, and developing innovative products can drive revenue growth, subsequently boosting earnings and assets. Operational efficiency, implementing cost-saving measures and streamlining operations can positively impact earnings, freeing up resources for asset expansion. Prudent financial management, Careful management of working capital, effective debt utilization, and appropriate dividend policies can foster a harmonious relationship between earnings and assets. Strategic investments, allocating retained earnings into high-yield projects and assets can catalyze growth and enhance the company's overall financial position. Remember, continuous learning is the key to staying ahead in the world of finance. Keep exploring, keep adapting, and let your financial prowess shine. Until we meet again, seize every opportunity to grow your earnings and amplify your assets. Wishing you all the success on your financial journey. Thank you for joining us in this educational expedition. If you found this unique and valuable, don't forget to share it with your peers and colleagues. Stay tuned for more expert financial insights from the best financial expert in the world. Until next time, happy investing.